Right, and finally, the dollar index extends recovery to 94.70, but still remains vulnerable. Very vulnerable or partially vulnerable?
Well, it's as vulnerable as perhaps, looking at, I think we need to also be a little bit of an expert on the bond markets, because I think that's going to be the defining factor. So we're in a Fed blackout period now, so we're not going to get any additional chatter from the Fed. So we're watching for the data, and of course that data is of a relatively low level caliber over the course of the next few sessions. But clearly, if we were to see further pressure on bond yields, so US yields continuing to drift lower, sort of down towards the 225 level, then that DXY recovery will prove to be rather temporary, and I think we'll be finding ourselves back towards the sort of 94.10 area. So yes, we can see a little bit of a DXY rebound. You can argue that the index was a little bit oversold, but I think unless we see US yields starting to move back higher, I think people will start to use any rallies as an opportunity to fade that move and start to sell it again.
Well, speaking of that, we're around 95 at the moment. We've got resistance up to 95.30 that you can see there, but probably surprised people a little bit. They're probably rather too bearish on the dollar, weren't they, going into...
Well, we've had people rushing from one side of the boat to the other over the course of the last 6 months. So people suddenly become irrationally bullish on the dollar at the beginning of the year, as the fiscal reflation story was really the only game in town. Now we've actually seen increased pessimism regarding the political dynamics in the US and that fiscal retrenchment, the reflation story. And we've obviously seen the Fed just rowing back a little bit in terms of the implication in terms of monetary policy strategy. So the pricing of that December hike has started to dissipate. And so we've suddenly gone from irrational bullishness to irrational pessimism. Somewhere in between is probably still the right level. And I think it may well be the case that some of the moves that we've seen in the dollar against perhaps some of those current commodity currencies do look a little bit elevated, a little bit stretched. So the Aussie couldn't get through 80, for example. Dollar CAD hasn't got anywhere near 125 yet. So there are some big levels around.
Too much too soon, a bit too
And I think that may be the scenario, that we may need to see a little bit of a correction first.